What it do? What it do? But welcome back. I'm about to start these daily range case studies. I don't know if I'm gonna rename the name of what I like. Actually, hold on, let me face cam. But I don't know if I'm gonna rename it to like daily review or I'm gonna keep it the daily range case study. I might revamp the title and just the overall name of what these videos are gonna be, just for the sheer fact that I'm not just gonna be doing daily range case studies. I'm going to be reviewing the trade if I took any trades that I took along with the daily range case study. So it's kind of like a daily review, but you get the idea. Whatever it is, you would have seen it by now. That's just going to take some time for me to think of. But first things first, we're going to start off on US30. I did not take a US30 trade today, but I did have an analysis that we are going to go over. Hold on, where's my Telegram at? Before anything, let me just kind of show you the trade that I'm talking about, the trade idea right over here. So let me just open that. I'm going to scroll all the way up. And you cannot see this. It's right here, though. On this US30 thoughts idea, right down here, I had the overall analysis for 30. I'm not sure why it's not coming up. Do I gotta make this shit like a... It's because it's a window screen. Okay. Okay. I'm not sure where it is, but nonetheless, just join the Telegram. You're just not going to see it in this video of the actual Telegram. But the trade idea I originally called out on US30 is going to be going over. So first things first, I always start with my 3-point outline, which consists of drawing the Asian session range, which right here is going to be from 18 o'clock all the way to midnight. We're just going to make it this color for right now. So that blue box is going to be our Asian session range, and that is from 18 o'clock all the way to the midnight open. I'm going to make this orange, matter of fact, and make this clear. There we go. So the orange box is the Asian session range. This red line is going to be the previous day's high, and the previous day's low is going to be all the way down here. So the main three things that I always try to mark up are going to be previous day's high, previous day's low, Asian session high, Asian session low, and then depending on the session, say, for example, if I'm trading New York session, then I'll potentially mark up the London high and low and use that as a potential target. But the main thing that I want to go over with you guys is how was I able to predict the longs that happened at 10 a.m. and how were they so precise? So first things first, at 10 a.m. was right here. So anything before this line is what I had to go off of. Everything that happened after, I didn't know was going to happen. Everything that happened after was just pure, just market moving. So what was the reasoning behind my trade? So first things first, the main POI or point of interest that led me to believe that price was going to have its reaction to go higher is this 4-hour fair value gap right on here. So on the 4-hour time frame, this candle high to this candle low left a gap on the 4-hour time frame, which price traded into at what time? 9 o'clock. And if you want to get even deeper, did it trade into it at 9 o'clock or 9:30? At 9:30 is when we actually had the full push. It traded into it pre 9:30. So if you guys pay attention to my live streams or the Zooms or anything, there are going to be times where I do potentially take a trade right before 9:30 because I expect that 9:30 volume to push higher. So boom, we have this 4-hour imbalance that price traded into at what time? 9:30. So at 9:30, price ran below the 8 o'clock low, doing what? Draw of the liquidity. So ran below these lows, stopped everyone out that thought it was going to be going higher, came down below, tapped into the 4-hour fair value gap before eventually rallying higher, targeting what? There's a reason I always like to mark up session highs, session lows, and daily highs, daily lows. It's because there's a lot of the time there's going to be liquidity resting above and below. So let's just kind of mark this up. So the main thing that happened was right down here at 9:30 a.m. we had the 4-hour fair value gap get traded into. What else did we have? We also had, if you were to pull a fib from where? Somewhere we already have drawn. It's going to be from the previous day's low, and we're going to be drawing it to the previous day's high. Why? And not this high right here? Because at that moment, like I said earlier, price wasn't here yet. The only thing that we could have gone off of was everything to the left, which was going to be from here. And I'm talking about pre 10 o'clock, because 10 o'clock is when we got that volume to continue pushing higher. But 9:30 is where the move actually happened. And that fib that I drew, like I said, I drew it from where? Previous day's low, previous day's high. I keep it very simple. A lot of the stuff I look for is very repetitive. I look for the same things on different days. So what happened? Price traded into our fib level. And if you don't know what the fib levels are, I just have it from a 62 to the 88%, and that's just kind of my range. And as you can see, traded right into it, traded into that 4-hour imbalance. So we had both of those. So we have the 4-hour for value gap it got traded into, along with the fib long. And all of this happened at what time? 9:30. So just off of that, I didn't really need many other confirmations, because for one, price has already been bullish for the past. Yesterday was bullish, the day before was bullish, the day before was bearish, the day before was overall bullish, day before bullish, day before bullish, day before. Everything's just been bullish. So just keeping it straightforward, that is the main reason why I was looking for longs on US30. Where did price end up moving to? So if you were to able to get in anywhere within this area, the ideal area to target would have been either the London high, which you could have got a good exit. If not the London high, you could have been looking to exit around the Asian session high, also would have worked, or the previous day's high. The main thing that I like to look for when it comes to an exit or an entry, or just whatever reasoning to have behind why you got in or out of a trade, I simply target liquidity. I look for the nearest session or nearest higher time frame liquidity, if that makes sense. I don't necessarily mark up my 4-hour lows or 1-hour highs. I strictly mark up the previous day's highs, previous day's lows, and then session highs and lows. For example, Asian session, London session, New York session. All of those are building liquidity throughout the whole day that lead price to basically play off it. And that's all this was. There was a 4-hour fair value gap that was already built in price. And all I simply did was wait for it to trade into it at a specific time when price was already bullish. I tried to keep it simple. There was not really much thought behind this trade idea. Now, this isn't a trade that I actually took, but this is a trade idea that I did call out. So with that being said, I'm going to just screenshot this so I can put this inside the Telegram. Make sure you're in Telegram if you haven't. And now we're going to move on to NAS100, which is where I actually had a successful winning trade. Now, as you can see, these are two different charts, two different pairs. Now, even though they're two indexes, that doesn't mean they're going to trade exactly the same. So what is the main thing that I'm going to do? Start off by marking up previous day's high, previous day's low. And then I'm going to also mark up the Asian session high, Asian session low, which is right in here. So now with that said, where are the main areas of interest that you may be looking at? For one, you may be looking at the London high right here, got traded into, and price had a little reaction off of it. That is something that did happen. But the main thing that I want you to pay attention to is right down here, because this is where I was actually able to capitalize on the move off that previous day's low. I'm going to try to be real quick with it. I'm just going to look for the screenshot that I was in the trade so you guys know it's not cap. Full screen this bitch for y'all. Just like that. Let it zoom in. So there you go. As you can see, there was a trade taken right there, and it was called out in the Telegram. So you can't say shit, buddy. Whoever was going to say something. But with that being said, what was the reasoning behind me taking this trade? I'm always going to say it. The main thing that comes first is time. Always align yourself within the time. You got to align yourself within a specific time if you're looking to catch a trade. Simple as that. What time did this happen? 9 o'clock, 9:30. Well, 9:30 going into 10 o'clock. What does that remind you of? The same place and time that the trade happened on US30. And if you go to S&P, the same place and time that it happened on S&P, 9:30:10. Then if you go to DXY, it's a little bit more rangy. But when did DXY start having its major drop off? And if DXY is falling, that means the indexes are going up. The DXY started to fall 9:30 going into 10 o'clock. So at this 9:30 going to 10 o'clock, everything started getting the momentum. Everything started getting the volume, which led me to have a good trade. And I didn't even, I'll go over it more. I'll get into it. But what was the reasoning? Basically, 9:30 going into 10 a.m., we had a false break. If you don't know what a false break is, it's basically the opposite of a breakout. Instead of it breaking out, it faked everyone out and it false break their ass and it cooked them. For example, just like this. Price came below this previous day's low, so everybody that was shorting looking for the breakout ended up getting trapped. The bodies never closed below this body here, but as you can see, it ran that low and then immediately started to reprice going the other direction. Now you could also say maybe it was this 1550 level, like right here, but I'm not gonna lie, that wasn't really anything I was paying attention to at the time. The main thing that I was paying attention to was that we were running an area of important liquidity. Where's the liquidity? In this case, it's below this previous day's low, meaning there's just a lot of money orders stacked below this area. What happened? Price came down, targeted it, and this is what led me to want to take price going higher. I bought right at the previous day's low, expecting price to go higher. I had about a 30-point stop loss right over here. So with 30 points, it gave me a good risk to reward. I think my stop loss was like right near that wick. And all I was looking for was to see price trade up into this gap right here. Because at this point, I wasn't expecting price to just make a full reversal. That's not what I was expecting at this point. At this point in time, I was just capitalizing off the fact that at this time, price is running an area, and I'm just looking to see if I will be able to get my average 1 to 2, 1 to 3 trade. And this right here would have gave me, I think it was a 1 to 2.5. I closed out the trade overall for, it was 1.1 and 1.2, so about 2.3% profit, risking 1%. So a little bit less than what this is right here. But as you can see, over time, where did price end up going for? It went for the London high, which would have gave a 1 to 6. And if you would have been aiming for the previous day's high, that would have got missed, and maybe it gets tapped into later. But for the basics of what I took this trade right here, and then this is where I scaled fully out. And if you want to see the screenshots, you want to see where I actually called it out, go find a video. Matter of fact, I'll even post a video probably tomorrow of the live trade for anybody that wants to say anything about that. So right down here would have been the ideal trade. What happened? Price made the run, and within just this 10 o'clock candle, price moved crazy. This was about 170 points, and that's a lot for NAS. It's a lot for NAS. Ran up to where? Ran his London high, which was at 3 a.m., which is why, like I said, I like to mark up certain areas of liquidity. And if you even look at right here, this Asian session high was also got ran through at that time. So price ran the London and the Asian session high at what time? 12 o'clock. And that led price to slowly go into this retracement. Now, it didn't fully reverse. It just had its little retracement. But it was a simple trade. Like, the main thing that I want to tell people is, because I'm about to wrap this up, you don't want to overcomplicate anything. Don't overcomplicate anything. There's no point. You just want to have a system and a strategy that you know you like and that works around you as a person. Why? Simply because the number one thing that you need to have in order to be successful when it comes to trading or when it comes to anything with money is risk management. You got to understand proper risk management and actually apply proper risk management, because it's one thing to say you understand it, but it's another to actually do it, and your results speak for themselves. So with that being said, journal your trades, have rules, specific rules that you follow to the T, because the rules are useless unless you follow them. And then after that, learn from your mistakes, learn from experience. That's the main thing. Have something that you know works for you, back test it, journal it, learn from it, and show up every single day. That's the only way you're going to be able to improve. You're not going to improve by switching different strategies. You're not going to improve by switching different ways that you trade. You just got to do the same thing over and over and over to the point where it becomes second nature, to where you can detach the feelings away from it. But yeah, I'm just going to get back into these little case studies. I'm going to try to do them every single night again. It'll be good for me to have something to focus on, and I think it'll also be beneficial to you guys here watching, either on YouTube or in the Telegram. So with that being said, appreciate you for being here, and I'll see you guys in the next one.